Well, we started with infrastructure, but you already heard talking about capital flows and trade. The task force on trade, investment, and growth has been chaired by Piercarlo Paduan, Professor Paduan, who's with us today here at Bocconi University. So please welcome Piercarlo Paduan, which I hope is here and can join me on the stage. Professor Paduan, welcome. And please take a seat, because for the opening remarks, we also have Pascal Lamy. As you know, Pascal Lamy has been the head of the World Trade Organization for 8 years. He's been European Commissioner for Trade. So it's an honor having him today. I would like to start asking Pascal Lamy, you spent basically your whole career fighting for free trade and against hard borders. But we know that the pandemic reignited the tension towards protectionism. So what do you think is left to the G20 to work in order to create more space and a future for free trade currently? Pascal Lamy.
Let me first thank, before answering your question, l'Istituto per gli Studi di Politica Internazionale and the Bocconi University as a co-host of this T20 summit for this invitation. On this question, I think we have to make a difference, which is not often made between what I call protectionism on the one side, and on the other side, what I call precautionism. Protectionism is when you protect your producers from foreign competition. It's a well-known game. Precautionism is different. It's when you protect your people from risks. And this is a very different issue, although there may be some blurred frontier between protectionism on the one side and precautionism on the other side. What we've seen during the pandemic crisis is not protectionism, it's precautionism. Most of the trade measures that were taken during this crisis did not have as a purpose to protect producers from foreign competition, but to protect populations from this COVID virus, and to take the necessary consequences in order to properly address the sanitary shock and then the economic shock. So this is my own view, and I think the operational conclusion of this for the G20, hence, which I put on the table of the T20, is that we will need in the future a higher degree of regulatory convergence in this world. Regulatory convergence understood as the regulation of precaution, safety, security, pesticide in flowers, safety of lighters, safety of cars, safety of data. And this is a much more difficult ground. I think looking forward, including on the environmental side, we have to better organize the coexistence of trade opening on the one side and the exercise of precaution on the other side. This is what our populations are asking for.
Well, this is a great point, but Pascal Lamy, there's another aspect we talk about, the green and also the digital transition, and all of these will have an impact on international trade. How do you think we can promote a greener and more inclusive and sustainable international trade looking ahead?
On this question, I think you are right. We have collectively to face with two major challenges, the digital transition and the green transition. In both cases, and this is my contribution to this T20 discussion, looking at the G20 agenda. In both cases, I think we are running a serious risk of, if not deglobalization, I would not go that far, a serious risk of fragmentation of our systems. In the digital world, there is a risk of a bi or even tripolar world with US, China, and probably Europe. And this is pretty clear if you look, for instance, at the regulation of data, data privacy, data protection, data localization, data storage, data availability are regulated today in a different way in China, in US, and in Europe. And this entails a risk of fragmentation, which I think we should limit. We will not totally avoid this because of deep ideological differences that have a larger impact in the world of digitalization that they had in the previous world. Cars and bicycles are ideologically neutral, data are not. And this is something which I think deserves attention. And I would say the same about the risk of fragmentation, of globalization in decarbonization. We all have to cope with the same challenge, which is decarbonization of economies, and we all know that this entails a time horizon of carbon net neutrality. I'm not worried by the fact that China is 2060 and Europe, US, Japan would be 2050. What matters is more coordination in our trajectories to get there, and more coordination in our trajectories to get there entails, in my view, more coordination in how we use the different available policy tools, whether it's taxation, whether it's emission trading, whether it's technical standards, whether it's incentives or subsidization. The toolbox is a well-identified one, but so far, again, if you look at US, China, Europe, we use them differently, which entails a risk of carbon leakages if carbon prices or tools to address this are so different. And I think, again, this is something that needs to be seriously considered for the future. We have, and this is what the three Instituts Jacques Delors in Paris, Berlin, and Brussels have proposed, a sort of comparability platform, which, in my view, should be around the WTO table.
Well, thank you so much, Pascal Lamy, for this. And let me turn to Professor Paduan here on the stage in Milan. Professor Paduan, we just heard talking about fragmentation, and we know that in the last decade, especially when multilateralism was in a standstill position, there was a multitude of bilateral agreements and regional free trade agreements. So you've been working on this also in your task force here at the T20. What do you think that can ensure consistency between bilateral agreements and multilateral agreements looking ahead?
Thanks very much, and good afternoon to everybody. It's a great pleasure to be here. Let me anticipate that I share very much many of the issues raised by Jeff Sachs and by Pascal Lamy, with whom we had a very tight collaboration in this process. He mentioned in his final remarks the notion of risk, and this is something I would like to develop a little bit. First of all, how do we see the global economy after COVID? We see it as a fragmented entity. And so if there is something fragmented, the key question becomes, will fragmentation go further down the road, or can we revert fragmentation? This is the key policy issue that at the global level, at the G20 level, should be addressed much more forcefully. Also because there are new risks down the line. If you look at the policy debate, the global policy debate these days, you list a long number of factors of risk, which I offer you only a small sample, but which are also telling of how much we should be aware of the fact that we need to have instruments to deal with risks. Well, the first risk that comes to mind is the new COVID risk. Is there the risk that we have a new COVID experience? Oh, well, heaven forbid, but this is a risk we must have in our agenda. Then we have risks which relate to the fact that the macroeconomics performance is at a turning point. There are now new talks of having a stagflationary situation going forward. More inflation, there's a lot of debate about that, but also less growth. And then, of course, there is the green transition, which bears risk. One way to characterize it is the following. The green transition might be going on too slowly, so we do not reach our targets. But paradoxically, it might be too fast, because it generates pressure in the society, which may not be sustainable. And this is a clear issue which relates to fragmentation at large. Transformations in the global system and its integration have to be dealing also with social sustainability. People must be the target of policies, and therefore if policies do not target people, they are doomed to fail. So how do we shape up our response to this situation? This is the last point that Pascal made. How do we transform a multipolar world into a newly integrated system? This is where the G20 come in as a very powerful potential instrument. What G20 have to avoid is, first of all, what we might be calling aggressive geopolitics, which you all know what it means, which is a global responsibility. It's not because some countries or regions are more geopolitical than others. It's the way they interact that it's not acceptable. So how do we avoid geopolitics? One answer is, let's go down the regional alley. This is not a new debate. In the international economy debate in the 1990s and 1980s, there was a lot of discussion asking the question, what do we do to replace the Bretton Woods system which collapsed? And the conclusion was, we need a new regional structure. However, regionalism may be open or closed, and if it's closed, it's conflictual. So the question, in my view, becomes, how do we use platforms such as the G20 to generate open multilateralism and regionalism? Well, let me conclude my first statement by saying that we know a little bit about how, in the past, these systems operated, to know that there are a few conditions which need to be taken into account to make regionalism sustainable. One is that regionalism changes over the medium to long term. Therefore, countries participating in regional agreement, including in the bipolar sense, must be ready to adapt preferences so that there is a meeting of the minds, that we just do not keep our preferences intact and expect others to do changes. We must all have a propensity to change, number one. Number two, this happens over the long term. And this has to be accompanied by institutional changes. In our work for the T20, we looked at some depth at how to reform the WTO. And the WTO is an institution which has been very important, now needs to be revamped, but this needs to be put in context of a long term. And final point, and I'll stop, is this has to do having people in mind. And people in mind also means how to involve markets into the story. I may sound a little bit different with what Jeff Sachs said about markets, but we need to find ways, and we know that it is possible in practice, on how to generate incentives so that markets help rather than go against multilateralism. Let me conclude with one example. The environment and financial markets. We need to have a mechanism that redirect financial resources to finance infrastructure, to finance healthcare, to finance green development. This is possible. What we need to do it as a policymaker level is to design rules and implement rules in a way that reconcile social targets with individual incentives. This is possible, and there are many examples that show that this is the case. So, and in Europe, we are at the vanguard of this process. So I am very much confident this is the way to go forward.
Well, Professor Padoan, to go beyond fragmentation, it takes trust, it takes transparency, it takes a level playing field. So you've been working on that, and what are the main recommendations that you feel like to share from the T20 on this?
Well, the main recommendation is, first of all, that trade is important, but as Pascal said, it's not the only issue. So one area of recommendation is exploit the political platform of the G20 to look for what economists of international relations call issue linkage. We can achieve improvement in trade relations if we couple it with security relations, so that on the table there are more options to be exploited by countries at around the table, number one. Number two, as I said before, the G20 by definition is a long-term instrument. Let me recall that the G20 as it stands today was established after the breakout of the great financial crisis. And since then, it has evolved in dictating the policy agenda. Sometimes it has worked, sometimes it has worked less. But there are cases in which there is success. So policy can be cooperative. We should reject the idea that there is only conflict among countries or among sovereigns over the long term. This is not so. It's difficult to find common agreements, collective goods, public goods, but it's possible. So this is the major recommendation which comes out of the G20, and the WTO reform should be put in that perspective.
Thank you for this, Professor Padoan. We'll get back to you in a moment, but now we have three outstanding panelists that I want to introduce to discuss this, and let me start with introducing them. They're all online. Pamela Koch-Hamilton, Executive Director at International Trade Center. Professor Kenneth Rogoff, you see them all on the screen, Professor of Economics at the Harvard University and former Chief Economist at the International Monetary Fund. Welcome also to James Zahn, who's Senior Director at the Division on Investment and Enterprises at the United Nations Conference on Trade and Development. Welcome, all ladies and gentlemen. Let me start with Pamela Koch-Hamilton with a very, I tend to ask simple question, but how can trade, we heard about fragmentation, we heard about that the legacy of COVID-19 is an increased level of poverty and inequality. How can international trade help to face and tackle this issue?
Thanks so much, Andrea, and thank you for the opportunity to be on this panel with other distinguished speakers. I'd like to commend the Italian government for shining the spotlight on these three important pillars: people, planet, and prosperity. I think, like many of you, I'm concerned by the increasing levels of vulnerability caused by the pandemic. In my own country, Jamaica, over 50,000 persons working in tourism, an industry which employs mostly women, have lost their jobs. On the other side of the world, a third of women-owned enterprises surveyed in India closed their businesses temporarily or permanently. So we see it at a larger scale in the UN Secretary General's report on the progress towards the Sustainable Development Goals. Global unemployment increased by 33 million, with young people and women being hit the hardest. If we let that sink in for a moment, it definitely raises our temperature. It's our duty, I think, as governments and partners to prevent any further losses. We need to act now to make trade more inclusive and support those most vulnerable to withstand the economic shocks. So we need to make critical policy choices and create a supportive ecosystem that can help weather the storm. Trade finance and financial assistance, whether through tax relief or delays in loan payments, is key in the recovery efforts. Secondly, investments in technology and innovation to help more MSMEs integrate into the digital economy need to be fast-tracked. Many MSMEs, especially those in LDCs, are being left behind due to the lack of ICT infrastructure and also access to indispensable technologies. Women entrepreneurs must be prioritized in all policies and ODA recovery efforts to enable them to become strong players in global trade. The G20 also has a tremendous role in working through the WTO and other multilateral organizations to cooperate for economic and social recovery. So addressing inequalities through trade also requires a commitment to keeping development at the center of trade. And our keynote address speaker, Pascal Lamy, in his previous slide, fought to revive the Doha Development Round discussions. Perhaps history has provided us with another opportune time to rethink how trade can foster greater equality while putting people and planet at the forefront. At the ITC, we're driven to create the trade impact for good, or inclusive trade. Over the past year, while the pandemic has threatened the livelihoods of so many, we have been pushing ahead to strengthen MSME's resilience. Today, it's the pandemic. Tomorrow, a new shock will emerge. It's the nature of the game. So through the support of many of our G20 partners and others, we have created opportunities for the most vulnerable to benefit from trade. Our She Trades program, for example, we invested in creating a tailored coaching pilot program in early 2020, which resulted in 94% of the women entrepreneurs reporting improved business operations. These women also now have an e-commerce strategy, improved ability to embed international payment solutions into their operations, and partnerships with logistics providers such as UPS to accelerate exports. Our She Trades Outlook, which was launched in 2020, we're helping policymakers with data analytics to flag areas for reform and assist them in designing deliberate interventions, such as in government procurement, to support women in trade. We're also supporting companies to build back better by focusing on green business practices and sustainability through our Green to Concrete hubs. So helping MSMEs in their green transition has begun to pay off. And I think that that's important. Thank you. I think I'll stop there.
Yeah, thank you so much, Pamela Koch-Hamilton. Professor Kenneth Rogoff, when we look at the reopening of the economy in terms of also international trade flows, what we see is that supply couldn't match demand. And so we have disruption, we have bottlenecks, we have higher prices for commodities and not just commodities. Do you think that this is just temporary or is more structural and will be with us for a longer period, Professor?
Well, let me just start by thanking the Italian government for organizing this important G20 event. And I follow some excellent remarks by Professor Sachs, by Pier Carlo Padoan, and by Pamela Koch-Hamilton. And I particularly want to pick up on the last set of remarks, which leads into your question, which is this has been a very uneven pandemic. It's actually affected growth less than people expected if you look at the aggregate numbers, but it's been very uneven and hit very hard at the poor and lower income within countries, which has received a lot of attention, and across countries, which has received a lot less attention. We had a period it's the first part of the century where there's a lot of catch up, a lot of people being pulled out of poverty. And now we have this incredible regression. And so when we talk about supply chains and trade, this is also something that's not going to fall evenly. So let me just make a couple quick comments about your specific question. I think the lessons from the Great Recession and a lot of research that's been done on COVID-19 is that left to their own devices, the supply chains will reorganize. Yes, there are bottlenecks because this incredibly complex system starting up very unevenly. The demand for manufacturers is high. Services is very weak. We heard about tourism. And so the supply chain, the global network isn't built for these imbalances, but it will adjust if governments let it. And I think the big debate here is how much should governments push to have reshoring to provide, I guess what, Pascal Lamy was describing as precaution as opposed to protectionism. I don't think, I think you read about companies looking at reshoring, but I think they're not doing that much of it. They're so dependent on China as the workshop to the world on trade with commodities for other countries. But I think the real questions with governments, and I think what a lot of research says, again, to underscore what Pascal Lamy said, it's very tricky business. How much is precaution and when you slip into protectionism? And if we slip into protectionism, then certainly the effects can be long lasting. And let me finally lead into a comment about how long these will last, the effects you asked about commodity prices and inflation. You know, I worry that it can be longer than we think, that the geopolitical tensions, that various problems really governments are having, reorganizing, deciding what to do, are going to lead to a retreat from trade and from globalization, which has been a big factor keeping inflation low. We could see this run into reverse. So I think to say something Pierre Carlo Padoan said, Jeffrey Sachs put a big emphasis on how much money needs to flow, and that's true. But I think there has to be a role for markets here, that if governments get in the way, prevent global supply chains from working, we could see both slower growth and higher inflation. And yes, this specter of stagflation. Thank you.
Thank you, Professor Rogov. Longer than we think. It's a bit concerning, especially given the central banks will have to manage this for a longer period maybe than expected. But let me move over to Jim Sun. In talking about foreign direct investment, that we know it's a crucial tool, especially for the development countries, to keep grow. But how about combining these FDI flows with the Sustainable Development Goals of the United Nations? What are the key actions you're taking to align these two?
Thank you for having me. First, about the current trends and prospects, and then the sustainability financing and action plans. Regarding current trends, we see a kind of rapid recovery of global investment, but growing divergence. In a sense, we see a kind of a global FDI that declined by 35%, but this year we expect a kind of a recovery between 10 to 15%, and perhaps next year, another 20% that getting back to the track of the level of 2019. But having said that, we see the kind of divergence in three areas. One is the developing country kind of dimension, that developed countries FDI is recovering very rapidly, and we have seen the first quarter of this year. But for developing countries, it's lagging. The recovery of investment is very slow. Secondly, there's divergence between greenfield investment and cross-border merger acquisitions. And in fact, we see the recovery is more of property restructuring driven, replenish of the inventories, instead of new capacity adding through new investment. That's what we call greenfield investment. And the third is that we see a kind of a manufacturing is heading, while services, particularly in hospitality industries and others, are lagging. So that's kind of the divergence. What is worrisome is the first one, that is developing countries is lagging in the recovery of investment. And the medium term, we see a lot of risks. The kind of a risk, I would say, typically 3 Fs: fuel, food, and finance. These are the really sensitive areas that will be disruptive further to global value chain, to global economic recovery, and to investment flows. Longer term wise, I would say there's kind of fundamental transformation driven by 3 mega drivers. That is sustainability imperative, SDG, and corporate responsibilities. The second is new industrial revolution, and the third is kind of economic nationalism, or the realignment of global economic governance. All these will drive the global value chain to a direction of regionalization, reshoring, and additive manufacturing for smaller, going for scope rather than scale, but I wouldn't elaborate on that. But I would say at this stage, we see that the investment, or we see the economic stimulus packages as a very small proportion for long-term investment for recovery, but more for rescuing. And looking at the overall kind of stimulus packages getting into it, we would see roughly about 3.5 trillion US dollars is really used for designated for long-term financing for recovery and sustainable development, while there's a potential of crowding in 10 trillion US dollars. But compare with the overall package is just roughly about 10%. That is one factor. Now, the important factor, we see the impact of pandemic on SDGs, investing in SDGs. We have this 15 sectors we classified as investment intensive for achieving SDGs. And for that, the drastic decline of investment, domestic, foreign, public and private, is roughly between 1/3 to 2/3 of decline. And in fact, it's basically undone the progress made over the past 6 years, that's since 2015. That is very worrisome. But paradoxically, we have seen a kind of rapid growth of financing for sustainable development. And this sustainability financing, I'm talking about upstream, increased by 8% last year. It reached 3.2 trillion US dollars. That includes 1.7 trillion US dollars of private equity that designated to sustainability purposes, 1.7 trillion of green funds, green bonds, and then there will be kind of 200 billion of US dollars of social bonds, and that is 200 billion of mixed bonds. Altogether, it's a 3.2 trillion US dollars funds designated for sustainability. But having said that, overwhelming majority of such funds were basically domiciled in the north. It's over 90% or even 95%. So in fact, the sustainability designated funds are not crossing the equator to the south. And it doesn't generate any impact on that. And also, if we see this decline, we see that all these financing in terms of funds are not translated into pipeline bankable projects into the SDG sectors, particularly to developing countries for poverty alleviation.
Yeah. Thank you, Jameson, for this. I have to jump to the conclusion because unfortunately we have rigid time constraints. In a few minutes, we'll leave the floor to the IMF Managing Director. So let me get back to Pamela Coke-Hamilton asking about SMEs, because SMEs are the backbone of all the economies. And I know you've been working hard also on taking them global, with different actions. I have to ask everyone kindly to remain under 2 minutes, because otherwise it's a big problem for me at least. Thanks.
We will do that. All right, let me state up front that it's not solely about financing. And for those of us who are parents, we know that raising kids is more than about money. It's also about an ecosystem. So we think, first of all, there needs to be support to an ecosystem that supports MSMEs in a myriad of ways. First, we need to start with access to market intelligence. And it's very important for MSMEs to have this access, also to know about tariff changes, export restrictions, mandatory licensing requirements. And if there's ever a time they need real data, it's now. The other thing is connection to international value chains. I think James spoke about this before, but they face incredible barriers in terms of market requirements. Thirdly, the ecosystem has to look at vibrant in-country trade support institutions, and we work with them to try to develop their capacity to actually help their MSMEs. The regulatory environment is also critical, and we need to see how the regulatory environment within countries can operate. One quick statistic is, the limited access to finance remains a primary obstacle for growth. And according to the IFC, 40% of formal MSMEs in developing countries have an unmet need of 5.2 trillion every year, which is significant. So what we're saying is that there needs to be a whole of system approach: financing, market intelligence, developing e-commerce, digitizing, and enabling them to access markets across the board. So I'll just stop there because I know time is of the essence.
Thank you so much. Professor Rogov, you heard talking about FDI, and during the pandemic, they reduced by 40% or something like that. Now, this situation is complicated, and what do you make of the potential of global cooperation to restart an FDI flows towards especially poorest country?
Well, first and foremost, I think there needs to be much more equitable vaccine distribution. You're not going to see the FDI flow quickly until that problem is solved. And that's something there's clearly a role for global cooperation, as I think there is in many other areas. If I would single out one, it would be the energy transition is something where the advanced economies have a big incentive to try to support, to provide financial support to the emerging world, to developing economies, to have green energy. I will just mention I proposed forming a world carbon bank to try to give the technical expertise and the channel for this funding. I don't think the existing international financial institutions, much as I hope they recover from their recent problems, are really well suited to this. So this is something beyond this. I think, just to be short, I think we've really had excellent remarks from James Zahn about what the numbers are here, and from my other co-panelist, Pamela Hamilton, about what the focus should be. And I can only say I agree with them.
Thank you so much, Professor Rogov. James Zahn, lastly, do you think that the situation in terms of FDI flows can get better in this current condition of the economy, or worse? And in a few words, what do you think is looking ahead?
Yeah, looking ahead, as I mentioned earlier, the prospects look for the short term. I'm talking about this year and next, that there will be continual recovery. Recovery is slower than trade and the GDP, and it's typically 6 months to 12 months of lagging. But what is more worrisome is the kind of divergence between developing countries. And here, I would wish to use my limited 1.5 minutes focusing on the action plans that I think Pamela has already mentioned some of them. But I would say there's 6 sets of transformative actions we need for promoting investment in sustainable development goals. And first is mainstreaming the SDGs into national investment policy framework and international investment treaty regimes. We have done a survey that over 60% of the countries surveyed, that's over 120 countries, and basically they haven't have set investment strategies in SDGs into their national development strategies, nor have they factored in SDGs into their national investment policy framework. And for the international investment treaty regimes, we say that over 90% of these 3,400 investment treaties predates the SDG launching days. Therefore, there's not, most of treaties do not even mention sustainable development. Therefore, mainstreaming SDG is important. Second, reorienting the investment promotion facilitation schemes that includes reform the kind of incentive schemes and try to move it towards SDGs. Also bearing in mind the global tax reforms that will have a bearing on the investment promotion, including SDGs. The third is to establish SDG investment compact. Now we need for small economies to work together to build a larger market, industrial clustering, infrastructure connectivities, a kind of a way for this investment compacts, and then fostering the new partnership between multinationals, impact investment, and the small developing countries. And then there's also an importance for pipeline bankable projects, and we are building the capacity for countries by some projects and by some guidelines and toolkits.
Well,
yeah, I think my time is up.
I'm afraid it is. And so, ladies and gentlemen, thank you so much for your remarks. It was really a pleasure having you discussing here at the T20 today. And for your final takeaway, Professor Padoan, given what you heard from the panelists.
My final takeaway is that We need all to cooperate. We can address specific points such as infrastructure, such as value chains, such as finance, but these must be made consistent to some form of governance. And again, the G20 is the platform to do that.
Thanks again, Piercarlo Paduan, who's been chairing the T20 task force on this.